I'm at least thinking the probabilities based on how oversold we are, we're due for some sort of retrace back here, maybe to 33,000, maybe 35, somewhere in that vicinity. Historically, technical traders love gaps. Gaps will be like a stock closes today at 4 p.m. when the stock market closes and it opens tomorrow at a totally different price. So let's say it closes today at $20, tomorrow it opens at 25. If you ever fill that level back to 20, that's considered a gap fill, and it's a technical support area.
Okay.
In that situation. So I think that's a really important thing to pay attention to, especially since there's so much big money trading the futures on Bitcoin, and on the S&P as well. And then the correlation is just, I mean, it's risk on, risk off, right? Crypto is really the riskiest asset out there. At least it's considered to be, even though a lot of people want to believe that Bitcoin is going to be kind of that stable kind of goldish digital gold. Right now, it's an infant, right? I think it's always important to recognize that Bitcoin is a 13-year-old. How many 13-year-olds do we know that are stable, right? Um, it's just so think about it in that context. And then you look at gold, which barely moves up or down 1% a day, but it's been used as a store of safety for thousands of years, right? So Bitcoin, I think, eventually gets there. It's just young right now. It's a new asset. So yeah, I think it's super interesting. It's one of those things now where like I won't even trade it. Now I did get caught in it, I'll admit it. I picked up some when it was like trading in the 30s. As a technician, it hit some key supports, and I was like, all right. And one of the things that technicians do, they turn off their emotional brain, and that's usually great. 99 out of 110 times, that's amazing to do because you don't get caught in the emotional sway of the markets, right? So you end up doing the right thing. In these type of situations where there's just some sort of breakage, you actually do get caught in it. The way you mitigate that as a trader is to make sure that the percentage you're putting in is not a big percentage, right? So I did 5% of my portfolio, basically 5% down right there, right? I mean, that's just the basics of it. Luckily, I've been accumulating, and I'll just talk about it now, is that I have been buying Bitcoin down here, Ethereum, Solana, a little Cardano.
Let's
I've
go.
been accumulating down here because I do expect a technical bounce. Now, overall, I still see crypto going lower, but we are extremely oversold. It's a huge amount of wall of worry right now about what's going on with UST. And I do think we hit some major technicals. Yeah, so basically this is what I would consider a swing trade. Swing trades by nature are days to weeks, maybe a month or two, but they're not long term, which I'd consider anything over a year, like a long term capital gain type thing. So last time I was on, we talked about this channel, right? And this channel, when you look at this drop, right, this was a classic bear pattern. And I think even last time I was on, I said, listen, if you looked at if you looked 100 of the same pattern on different charts, 80 of them, or 80%, would break to the downside. And that's exactly what we did, right? So the probabilities, and trading technically is all about probabilities. Doesn't guarantee you results, but it puts at least the odds in your favor. Now, as we've come down here, this is where things get a little interesting, because now what I want to do is check this out, is I want to get rid of this, because this is old now. This channel is old. It's done. I mean, we may go back and retest the lower end of it, but what I found is really interesting, and why I've been accumulating here, is if you take a look at this channel, there's a new channel I found, and basically notice how I'm connecting these highs here. All right. And then what I want to do is drop that straight down and then look at what you get, right? So basically, if we look at the chart, let me just bring up my drawing tool. So you had a hit up here. It kind of touched here before it broke. It touched right there. Then we broke down. Then we touched it here and here. And then on the downside, you have this area, this area, this area, and then look at right down here. We just pierced that lower end. I'm at least thinking the probabilities based on how oversold we are, we're due for some sort of retrace back here, maybe to 33,000, maybe 35, somewhere in that vicinity. So I think that's interesting to note. And that's why I've been going long some of these coins here. The only other thing I would just mention is my target. So my upper end target is 20,000. I think we've discussed that in the past. My low end is 12,000, and I want to tell you guys why I see that as a possibility. So 20 is just the obvious taking us back to the 2017 highs. There's going to be massive support there. it makes sense from the perspective. Now, a lot of people, like you guys mentioned, have said, well, we've never retested a previous high in any other Bitcoin cycle. But the problem with that is then in a previous bear market, we've always gone 80 to 85% lower. So one of these has to fail, right? So you're either not going to go down 80, 85%, or you're going to blow right through that previous 2017 high, or at least touch it. So at least in the very least, I would say that would be your upper range target around 20,000. My low end is kind of cool because it meshes on multiple levels. If it gets to 12,000, we're all going to be scared, you know what, lists probably to do it. That's just the way the markets work. But check this out. So if you see this was your high at 69,000. If you drop that straight line down, right, that's a low of 33,000. The difference here is 30, and I can't draw it really, but $36,000 drop from this high to this low. There's something in technical analysis called a measured move, right? So a measured move basically means that you get the same move that you got previously, and that is where your next target would be. So again, if this was 36,000 down, then
we're going to zero. Highest... We're going negative. That's it. $36,000
no,
down.
We're not. Check this out. So if you so 36,000 from this point to this point, right? And then so take your highest pivot here at 48,000. Subtract 36 and it gives you 12,000 right there. So that would be the equivalent of a measured move. What's interesting about 12,000 is if you take 80 to 85% of 69,000, guess what you get? About 12,000. But I just jump in here is I really believe that the UST is just a result of the Federal Reserve pulling the liquidity out of the system, right? So if, in all fairness, if the Fed wasn't pulling back on liquidity, I actually think that in November we would have kept going higher. And you probably would have got that crazy blow off, crazy high, maybe at 100,000. But as soon as the Fed stopped printing money and started to suck it out of the system, it just took everything away. And what it does is it creates a situation where it's very easy to break a UST because people don't have the confidence anymore to just step up and throw endless money at it. And there isn't endless money at it anymore. And so I think it makes things vulnerable, like these different cryptocurrencies and different stocks and stuff like that. And you were mentioning before about the idea of the maturity and what makes it different. And what I would say is this, is that longer term, like on-chain analysis means something longer term, and that's what people, when it was 65,000, I was like, it's going to 20. And man, did they make fun of me, like crazy stuff. But they kept on being like, on-chain analysis. And my response was that in markets, there's one thing that's always, or there's two things that are always the same: greed and fear. And it doesn't matter what market it is, greed and fear are the most powerful emotions, and they will cause panic like you wouldn't believe on the way down. And that's why even with on-chain analysis in like a year or 2 years when things calm down will mean something, just like fundamental analysis for stocks, right? I do think that technically we've hit a couple levels here where we at least should get a bounce. I could be wrong, but again, that's what the charts are telling me. But if you're looking for the longer bullish case where we could maybe make our way back to the all-time highs, there is a level I am watching. Connect these lows here, you basically get a point right there. So for me as a technician, if we were to retrace into this area here and then get above it, that would be something big for me. If you're looking for the bearish case, that shouldn't happen, right? That should not happen, that you get back above that level. If you do and you stay above it, then all of a sudden it's a whole new ball game, and you could start looking for further upside, maybe back to 65,000. So right now, again, the chart definitely has a bearish midterm angle, even though I think you're going to get a bounce here. But that would be the bull case to get above that area. So basically right now it looks like around 40,000 if we got back above 40. Yeah, so I have been nibbling a little bit, like this chart on Polkadot. I mean, this is like an awesome level. Now, again, we all know that no level is guaranteed to have a bounce. I mean, but if there's going to be one, I mean, look, it's basically a full round trip going all the way back to this consolidation right here. So, I mean, that's one that I'm definitely interested in, and I picked up a little bit. Polygon is another one here. Take a look at this level here, this pivot high here and this pivot low. You basically, you touched there, then you recaptured this top one right there. And then Solana, same thing, same thing. And again, this is, it makes sense. If Bitcoin's going to bounce, then these are going to bounce. But you could see these levels on Solana right here and here. And again, there's still a chance we go all the way down to this $20 level. But it's one of those things where, I think it's important for everyone to understand that as a trader, you never are going to know the lows. The only way we can mitigate, you know, and try to get in at the best prices is dollar cost averaging, right? So even going back to my $12,000, you know, potential low, I'm not going to be one of those people that's like, I'm not going to buy Bitcoin until it gets to 12,000, because you know what? I'll probably be sitting there with 0 Bitcoin when it goes to 500,000. So what I like to do is I like to just play it really conservatively. Like basically I have my crypto account and I'll say, okay, I'm going to allocate 100,000 to Bitcoin, and I'm going to start buying, let's say 5,000 or $10,000 at 20, let's say, or 21. And then every 3,000, I'm just going to put out another order of the same amount of money. I'm not even going to think about it. The second you let emotion get in there and like, oh, this is the great level, I'm going to put it all in here, you're going to be wrong. So just do it robotically, every like 3,000 down. And then the idea is that if it goes lower, I'm going to dollar cost average. If not, at least I have some skin in the game when it does run up. And it kind of takes that kind of emotional side out of it. So I do want to say that, because I don't want people to be like, oh, I'm never going to buy until 12 or even 20. Like, none of us really know for sure. But the key is, if you start with a small position, you get some skin in the game, but you don't over allocate. I've never been a huge believer in the sell in May and go away. So for me, that was always a stock market thing where the institutional investors and the hedge fund guys would be like, all right, it's May, the kids are almost out of school, let's sell, and then we're going to go to the Hamptons for the summer with the kids. And, you know, so it's really, now that we have such a universal trading environment with, you know, everyone trading from their phones and everything, I'm not a huge believer in that, but that I think that's where it came from, is like the New York, you know, go to the Hamptons for the summer with your $1 billion type. I will say this, like, I agree with the other guys, is that the true technicians are the ones that make the pivots. So it's not about changing your view and flip-flopping. It's like, literally, I say to all my traders is that every day you get a new candle. It's like, imagine if you had a puzzle in front of you and you got a new piece of that puzzle every day. And yesterday it looked like you were the puzzle was a dog. Today it's a cat. Tomorrow maybe it's a chicken, right? You don't know. And you have to be flexible as a trader to say, okay, this is new information. It now changes it from a bear flag into a more neutral flag. The probabilities are always shifting slightly.